All right. Tuesday, December 27, 2016. I'm looking at natural gas here. Okay, so this is April of 2017. Okay, we have rollover tomorrow into February as the front month. But what I'm looking at here and what caught my attention was the deferred contracts. Basically, we'll say October, November. The bodies are running into it. The psychology in my eyes, they think it's a sure thing. Okay, here you have your little Harami crosses here where it opened, traded higher and lower, and closed at the same thing. So basically, it's kind of an undecided. The bulls have to hold the breakout here. So you could have a drop of, on this one here, maybe about 6 cents or so. Okay. The pivot for January is about 345. Yeah, okay. So my concern is on the deferred, okay, versus the front months, and we'll see that here as I go through them. But this is for April, and there's a lot of crosses on here, which is undecided. Now the unbalanced volume, okay, on here still has room to run on here. On the way up in here, it was higher. Okay, so you have folks that who they're willing to buy the deferred contracts versus the front months. So they believe that we have an adequate supply of natty gas on the front end, but we will be short on the back end. Here's August. Okay, not much here. You can see on the way up to the same type of deal. 45 on here and 50. So this is on a dime on here, so that you get for basically coming back and retest this. Okay, things are slow in general here too. You do have even though the prices have marched higher here, volume kind of weighing off. I still, even though it's thin, I still treat the price part of it even though if it is thin. Because if you had an ample amount of sellers in here, they would show up here too, right? So I even know it's kind of like on breakouts, you want to see the volume push in there that you have new folks. But like I said, things are thin on here, and we do have rollover. All right, December of 17, you could see it beginning to pick up here. It's the unbalanced volume actually matched the previous here on here. I think we're down about 2-3 cents right now. Okay, so the deal is the bulls have to hold the breakout here. Okay, and when you look at a weekly and a monthly, and that we're still pointed up. I'll show the point and figure chart up here. That 377 area again is where there was a lot of volume, and I think it's 384 and then 392 or 3 I think is the next heavy volume area. Here's February. Okay, right now we're going to treat this as a double top on here, so you can see that the deferred contracts they've moved into the deferred contracts and pushed them higher. They're willing to go out farther because they think that there's going to be issues that there may be carryover on this. Okay, but on the short run here, they're basically stalling. Okay, at the double top here. We basically need to see another day of this to see if it can carry on after this. Like you said, we have the rollover, so you have people getting out of January and moving into February. But then there's the same type of deal here too, where you roll over and they came out of January as it rolled over. Okay, so that's, like I said, that's a downside of futures, is you're constantly moving unless you go out to the deferred contracts here. Okay. January 17, you could see how they ran into it and then they came out of it as the prices came back here. Okay, 52,000, and then that'll drop off. January 2018. All right, so this is for next year. Basically, the prices are 2018, the following year. Okay. So 377. What I'm going to start doing is watching that October, November to see how they handle going forward here. Basically treat this as a bull flag, and then we're springing again here. Okay. You do have also like gasoline and heating oil. They're poking their heads through the underlines. Brent and oil are kind of holding on here. It's since we had holiday Monday, I think both EIAs are on Thursday, I believe. Okay. July, you know, the Harami cross really isn't a good thing up here. Okay. It's kind of like the old shooting star type deal. And you see that especially when you start rolling into the October contract. Same type of deal. Here you had June where the unbalanced volume up here was at the high. It still has room to run, so I'm quote unquote giving it hope here that there's some follow through on here. Here's March's, still has room to run on here. Okay, up in here is what do we have? 387 and 404. Okay. Those are targets we're shooting for March, and you have to go a little bit deeper in here, 363 or so for March for the bulls to kind of hold on to this here. March 2018, you can just see that they're chasing after this here. May, same type of deal. Where's my October? Okay, November. Okay, so here we have for next season. Okay, seasonal high is usually October, right? Then there's another one in December. Okay, so here, even though there's 27, it's just getting a reference. They're in it. Okay, so I first have to say, well, all right, I have to be cautious that they're setting a high in for November. In the previous season. Okay, so this is December or November of 2017. So I look at this as that, they're beginning to come into these deferred contracts thinking that this is going to be a give me here. And so that's why it's kind of, as a short run, have to be cautious. The amount of the green bars shows me how much they're pushing this thing here, from we moved off the low in January or March and traded sideways and gave it a spring and a pullback, and it takes off running and takes off running again. So here, if you see one red bar, that would be the retest. Okay. If there's an inside day, it'll probably continue higher. And here's October, basically the same thing again. So October, November, the bodies are moving into this thing. Okay, here's the previous peak, and we're up here again. So that's why I'm a little bit cautious on Natty gas here. Like I said, we have EIA on Thursday for both of them, both oil. You have the products moving on oil, gasoline and heating oil. In the old days that would help together when all the exchanges, all the pit, you have three pits roar and usually you get the fourth one to come in here. But natty gas is moving off of a 17-year low, and it's getting there are a few markets that are actually trading higher. Oil, is basically moving sideways to up, coming off of its $26 low. But natty gas is one of those where it's basically pointing in the upward sloping in September here. All right, so that was natty. So it's the first caution is the pattern. Secondly, it's if you get a pause with the rollover, you may have, where is that, Thursday it may come down and retest this area here. Okay. So you have to be cautious here that this is where it sticks all the, they weren't interested down here. They got interested in here, it pulled back on them, and now they're chasing at, you're beginning to get more believers. So my thing is the bulls have to hold this here, or we pull back even deeper here. Okay, but we'll know more in 2 days, won't we? Let me take a look here at some point and figure charts. Okay, so going through some Natty gas charts here. All right, so this is the March low, 17-year low. Traded higher, first pullback. This is where we got interested. On the pullback, had to run up into a December high. Had a pullback, basically a retest of this area, and now we moved higher. But we have a Harami cross kind of thing here. So we have the possibility, and we saw that they're pretty giddy on the October, November contract. So it's one of those where it's like, this is where it gets interesting here. Okay, it would have been nice if it would have just moved higher, traded sideways, moved higher, traded sideways, moved higher, traded side, instead of just sharp and sharp here. We are beginning to approach an area where the resistance begins to kick in. All right. Okay, so here's natural gas. All right, so this fat area here with the volume is 384. Okay, so these are just reference numbers that I have here. 384. See, there's an area here of where prices where you have supply, and they'll change as I change the configuration. All right, so possible top here. All right, I'll give it 1 day of an inside type day. If Thursday is an up day, then we should be good to go here. Okay, 384. All right. Yeah, 384 is also at the top of the range here. Okay, so here is a little over 4, so that's 404. Here's your, this is a monthly on it with the trend lines. You could see here that the monthly went on, okay, it basically traded sideways through the line, and then it tagged it again on the high. Okay, so I'm just going to carry this forward here. The angle of ascent is decent, but if it can clear the 84 level, and I think there's like 393, and then then you're going to get a bunch of levels here. You can see it $4. I'm not saying it's going to go to 650 or 13 or whatever. That's a little too quick off the bottom here, because here was the first low at 190, and it took 2 years roughly. Okay, so it might take until March of 2018 for Natty to peak. It might stall out here in the 404 area and then trade sideways like it did here through most of the year. Is that January, February, March, April, and stalled until December, November, and then it took off October, November. So if we do get a stall out here in Natty, this is probably the pattern I would probably play off of. That prices come down, and then what you want to do is you want to wait for the pullback for that October, November, and then sneak into like February and March kind of same type of pattern. Basically, it's people see that, right? Oh, this is what it did. Maybe it'll do it again, and then it's working on it here. So, but the angle of ascent is kind of worrisome. But remember that, there's not, when it's down here at a 17-year low, you're not, Natty is a byproduct like silver kind of thing. When you're digging for oil, you get natural gas. So there may be that happens too. If we do get a stall in oil and things slow down, then you won't have as much byproduct of the natural gas. What's the cloud up here at $4? That's round. The other thing too is if you guys are and gals are long natural gas too, you can also write option contracts against it. You know, 4 is a round number. You saw, you know, kind of the back end frothiness. You know, I'm looking at this as, you know, here you have possible double bottom, sideways action. You know, it may take until March, you know, until the following year. Is this the one I'm looking for? What do we have? 392 is that one area. Okay, this one's working out. All right, so 336 is where it stalled, or where it came back on the pullback, roughly. I think it was 3 cents more than that. 392 is going to be your next one after 384, and then you get to 448, and this is a average trading range. Okay. You can see you're beginning to, you know, this is an area, you know, if you break this into thirds, you're in the lower third, you know, and you're getting, like I said, you're getting an opportunity of playing something. That's what I like about, you know, commodity futures is, you know, when you hear that, you know, something's at a 20-year low or 30-year low, then I get interested on it. Where's my white one I'm looking for? That one breaks out a little bit better. Okay, same type of deal here. What do we have? Quarterly. Oh, right into that area, 404 area. You can see it was support on the way down and maybe resistance on the way up. That's how I'm going to have to lean for right now. You do have a nice pickup in volume, though. Same type of pattern, yeah, around $4. So you could write calls against your position and pick up some, you know, if you don't want to sell off or what have you, you know, you can write, you know, kind of stagger your calls. And here we go. This is the one I was looking for. Okay, so here, 376 bar. This basically this is where volume's taking place at a price. Then 384. I think I said like 393 or somewhere. You know, here's another area. Here's, you know, 404, another area, and then further up is 436. But here, this is a downtrend line from the $6. So it's up against this too, the downtrend line. This, in theory, once this is cleared, then you've worked your way out of the bear market. I think that's the last chart, right? NDX. Yeah, okay. All right, so that's that on Natty gas. So like I said, short term, I'm a little concerned that they've, you know, weren't running into the deferreds. We have Harami crosses and gaps, and it's like, they're going to need to, we're probably going to need an inside day on here. What happens with an inside day is people are unsure, and then you end up with, you could end up with some shorts here. Let me take a look at money flow on here. There's still room to run on the money flow. And we're into the February contract. And RSI is into the 60s, so we're still good there. Okay, so yeah, that's basically it. It does look like we had the old Harami cross here too on that Friday that we closed up in the 376 level before we gapped lower and tested the median linear regression line, the median line. All right, so that's that on Natty gas. So basically, it's nerve-wracking for a couple of days here. You probably the bulls would probably have to come in and support it there on the breakout, but it's for, you know, for what I see, it's getting a little frothy in the back end. So all right, so there you have that.